freedom isn't the result of wealth. It's the foundation. Welcome to Wealth Independence, where freedom leads and real wealth follows through battle-tested strategies, hard-won lessons, and real-world experience. You'll discover how to accelerate your path to true financial independence. And now your hosts, Dustin Bailey and Adam Penn.
All right, welcome back to the Wealth Independence Podcast, where freedom leads and real wealth follows. I'm Dustin Bailey, and I'm here with Adam Penn. Adam, how are you doing today?
I'm doing good. If only the audience knew how many takes that took to get you to say that clearly.
What are you trying to say? I'm a professional here.
Yeah,
I know what I'm doing. No,
I'm doing good. I feel like I keep saying this at the beginning of most episodes, but I'm really happy with the amount of deals we're doing. I feel like, this year we've gone from, I think about 40 or 45 active investors to, I think we're approaching 80. Like people with money in the deals. We've done a handful of deals this year. We're doing more. We're, thinking of launching an oil deal towards the end of the year. And I'm excited that I feel like we can fill it.
Yeah.
So,
We've got a potential new partnership on some deals in Memphis that excited about. And
forgot about that.
Yeah, won't say too much about that since we don't have a deal. There's not an offering there, but we are excited about that. I think there's some, just in general, Memphis as a market, I think has a lot going for it, probably more so than I think people realize.
By the time this airs, it could be a real cleaned up city.
Yeah, it's entirely possible.
we've got the good old National Guard coming in there and cleaning them up just like they did to DC. So I'm excited to see that. I mean, it's a great city.
It is
overrun by nothing good.
Yeah,
I mean,
there are so many things. There's so many things going for Memphis that, like, I think if you could get some of the crime issues, and again, it's not like that's all over the entire city, right? I mean, but it is. I agree. It's more pervasive than in other cities. You and I have experienced it firsthand. Like we've seen it, right? It's just there's a little bit of a different feel, but it's also not like every single neighborhood in Memphis is a war zone. Like that's just
but some are, and some of it builds down to like Beale Street.
Yeah. No, it's. I'm excited about the opportunities in Memphis. I think even outside of National Guard and stuff like that, like there's a lot that's obviously there's been a lot of new investment that's going in. You were just there recently and talk about, and I noticed this when I was there last year, just driving around. You've got a lot of people that are investing a lot of money in a lot of areas there, new development, fixing things up. I'm excited about it. I think it's traditionally been a good, real estate, like cash flow market. People have been going into Memphis for a long time, but I think it might be on the verge of becoming something else. I think there might be a little bit more appreciation in Memphis's future than there traditionally has been. So excited for the opportunity to potentially do some deals. I think we've got an exciting partnership there that will be neat to see where that goes.
I think that leads into this topic pretty well, actually.
Absolutely,
because
I did not intend that.
Yeah, I know. You started talking about it. I'm like, well, that leads in nicely. But there's this idea that we wanted to talk about, which was, investing as a team sport and really just like the power of a mastermind. I was talking to an investor today. I don't know. I think, we were talking about oil and gas because they're looking at a deal we're doing. And they said, and I said, well, let me start at the beginning of how we started in oil and gas. And we talked for an hour. I mean, it was a lot of just what it is that we're doing. And I said, well, a lot of it started because I was in a mastermind group with Robert Helms and Russell Gray from the real estate guys. There was a syndication mastermind group. And eventually I ended up in the collective with Ken and George. And it was a great group of people. And I just learned that everyone was doing something, right? And I learned about all these different types of deals. I learned how people look at things. And I think one day I'll join back to a group like that. But really powerful, just to have that team of people to talk to. I mean, some of the first apartment deals that we looked at with Ken McElroy, which was great to have him review our underwriting. And then, there's another thing that just even in our underwriting spreadsheet, I think we probably were assuming, I don't think it was higher than 4.5% rent growth, 4 to 4.5% rent growth, and probably like 2 to 3% expense growth. And we have a friend who's super successful, 3 of them, and they have a large property management company. I think they have 800 units under contract right now, if I saw his last Twitter post correctly. And they underwrite at 3% rent growth and 2.5% expense growth. It's conservative. It's not hard to beat those numbers. So that's what we changed it to, right? And so all of those little things that you learn in each deal, I think that's what we want to talk about. Is just if you're out doing your own deal over and over. I'll say one more thing and see what you got, Dustin. Like I was talking to a wholesaler the other day, and he was saying, sometimes I'll just buy a house and I'll get a house under contract from an estate or whatever. I'll buy it, I'll trash it out, maybe throw a little bit of paint on the walls and put it back on the market. And he's like, it works. He's like, well, it used to work. He's like, the market's slowed down a lot right now. And I think when I look at it, and I'm not some masterful, experienced investor, but when I look at what some people do when they're just themselves, they kind of get stuck in their rhythm, right? They don't really change. And when you're in a group of people that are specifically talking about investing, what they're doing in business, how they're growing their business, how they grew their business, where they're failing, and you're having to explain some of the things you're doing repeatedly, sometimes if you're a group of 30 people and you're going to be together for a week, you're going to keep talking about the thing you're doing and you're going to get different angles from it. I think that allows you to not only learn what others are doing, but to reanalyze the way you do deals or the way you're currently doing deals, or has the market shifted? So I don't know, Dustin, what you got?
Yeah, no, we've talked about the power of a mastermind before, and I think it's very, very vital to get around people that are doing something similar to you, but that can offer those different points of view. Just to, like you said, you don't get stuck in that rut, and you start seeing things, and you're exposed to new ideas. I think one of the big things from this, Adam, you and I were talking about the idea for this episode earlier, and I think something that people you brought this up, and I agree with you that one of the things that is often underappreciated is the power of, like, people will look to a mastermind, right? Like whether it's a mentoring group or the collective or whatever else. But you can also learn a lot, and almost it's not really a mastermind, but you still get a lot of education from like passively investing with other people, right? Like, and whether that's in a asset type that you're not used to, or maybe it's a market that you're not used to, like you actually learn a lot from just investing in things, and that purely taking that and stepping into the arena, even if you're a passive investor, but still doing that, like it puts you there. You start paying attention to a lot more things. There's stuff on the news that you'll key in on, like maybe again, it's a new market and there's some headline from that city that you wouldn't have otherwise been paying attention to. And I think that's again, it's not truly a mastermind, but that's another way that like investing is really a team sport, especially syndications, and that you can learn. There's a lot that you can learn. You've said before, every deal is unique, and there's something special about every deal, and that a lot of times will offer a learning opportunity that could then be, it's just like anything else you learn. You could take that and then apply that somewhere else. I don't know if you want to go off on that or anything, but I thought that was you brought this up before we hit record, and I thought that was a really interesting angle on this that I feel like I've talked about a couple of times, but never directly. And I think it's important. I think it's something a lot of investors potentially overlook.
Well, the very simple side of things is when you look at real estate, right, and you look at passively investing in real estate through a syndication, sure, maybe you can partake in a 20, 50, 100, 500 unit building by being a smaller check size. And let's say you own 2% of the deal on a 500 unit building, right? You're going to end up with, I think it's 2 doors, 4 doors, 1 door. It might be 1 door. I think it's 1 door. And doesn't matter. The math's not important there. But what you can't do,
it's 10 doors.
2%?
2% of 500 is 10.
Okay. Thank you. You end up with 10 doors. I kept trying. I couldn't decide where to move the decimal. So if you end up with 10 doors, let's just say you end up with two. My example works better with two, Dustin. So let's say you end up with, you own enough of a 500 unit building that you end up with two doors.
You
Well,
own the
maybe instead
equivalent of two doors. To be clear, this is not how this works. Like you as an investor are not assigned
two
you
doors.
own
No,
units 34 and 35.
but you own enough of it, right? Oh, I don't.
Yeah.
We get the point. That you end up with two doors. Well, maybe instead of putting that $100,000 or $200,000 in the syndication, you could go put $100,000 down on a duplex, and you could end up with two doors. So that scales, right? You can say, hey, I've got enough money, I'm going to go buy my own building. I don't want to be part of a syndication. But you know where it doesn't really scale is when the asset you want to buy is too expensive. And an example of that is kind of like the first oil and gas deal we did. I wanted to put $50,000 into it, and that was the first deal I wanted to invest. The first oil and gas deal I had exposure to. I didn't, I think there was 3 wells. They were all loosely $2.5 million. I didn't want to put $7.5 million, nor did I have $7.5 million to put into my first oil and gas deal. So sometimes you get access to much larger types of deals, and not only like larger real estate deals, but larger assets that you couldn't own individually. Think of an office building, maybe not the best thing to buy right now. Medical office isn't horrible. Think of a strip mall. All those things that maybe you wouldn't go buy individually because they don't come in, little red house sizes. But that is another benefit. And then, you get to see, we have a mentor that's like, when we were learning how to do syndication, we were part of a mentoring club about it. And the mentor would say, if you want to go do a syndication, but maybe you want to see how others are ran, or you've got somebody, go invest in a syndication, see how that person does it, see what you like, see what you don't like. And that's not just go throw money at a random syndication, but invest in someone else's deal that you like the deal and you want to see how it's done, and they've got experience, and you don't have to be a co-GP on the deal, but you can just see how it's done. And so I like that a lot. I had an investor earlier today I was talking to, and she was saying, one of the reasons I want to invest in this deal is just to get exposure to this oil asset, right? Something that they don't normally have exposure to. She's like, I also want to talk to you more about it, right? And I know that if I end up in a deal of yours, I'm going to end up talking to you more. Not that you can't just call me whenever, but if we're in a deal together, I know that I'm going to be getting regular updates from you. I'm going to have questions, so we're going to have more conversations, and it's going to expand my knowledge. So it becomes more of a learning thing, and then I'm going to connect her with other people, right? She's going to come to me asking me a question about the deal, and she's going to also mention that she's having this 1031 problem. She's also going to be having this issue with an estate plan, or she's also going to be having this, right? And then I'll connect her, or I'll be having this issue with, the great thing was that she was a realtor. I'm like, I've been doing some flips locally. And she's like, well, I've always wanted to do flips. I get deals all the time, but I have no contractor or anyone to do the work. I'm like, well, we do the work. So it's just one of those natural things, right? Helps me, helps her. And as a team, it is beneficial, right, to everyone.
No, I think those are all great points. I mean, it just underscores again, investing is a team sport, and especially real estate, and especially syndications. And then, you've got those opportunities to learn. I mean, I've definitely had a conversation a few months ago with a guy he's kind of trying to decide whether or not to. He's like, well, should I go bigger? Should we do the syndication thing? Should we not? Should I invest passively? And I'm like, it was the same advice. And it was because it was the advice you and I had been given, right? It was like, go invest in one. Like you will simply learn a lot by getting exposure to the process. And then, last year I had never personally invested in oil and gas until last year. And we put some money in a deal, and that was hugely instructive for me to learn the space, to learn the terms, to learn, some of the metrics that matters, what types of questions I need to be asking, how to read, reports from the state and production reports. I mean, all sorts of things, right? Like it was very, very beneficial for me as simply from the education, right? And I mean, obviously we're still getting cash flow from it and want the return on that. We got a nice tax benefit from it too, but it's still it was very much for me, the education aspect was a large portion of it. So I definitely feel like, I've lived this, and it's something that you mentioned this earlier, Adam. You don't want to go dive into a deal that, the first deal you come across, right? Because again, you don't want to lose money, but also at the same time, don't be afraid to don't be afraid to invest in something simply for what you can learn from it and the connections it might offer. It was one of the things you mentioned about the investor that you're talking to, right? Where, she might mention in passing about having some other problem, and you're like, well, hey, I can connect you with so and so who can help with that. And so it's another way of like you invest in more of these deals. You're in kind of indirectly expanding your network simply because of now the people that you're connected with. And to your point, even if it's a sponsor that has hundreds or maybe even thousands of investors, if you've invested in their deal, they're more likely to take your phone call and have a
or
conversation with you and
have more regular phone calls. Right?
Exactly. And so, there's all these like secondary benefits from an education, from a growth, from a development standpoint that I feel like come from simply investing, from taking a step, being in the arena. And again, what you learn directly just from finally being exposed to things, and then what you can get indirectly from the network and from the connections. This is a very underrated aspect of especially syndications. And the team investing and the benefits that come from that.
I think something that would be interesting, and this has not specifically happened to me that I know of, but let's just say someone very early on in their career, a few years out of college, good income, call it $300,000 a year they're making, right? Really high income.
How many years out of college?
I had friends out of college making $350 at Amazon.
It's pretty good.
Yeah, and that was in 2017.
That was not me.
Yeah, no, I know people that came out of college making lots of money, and software engineers are kind of on the downcline right now. But anyway, you come out of college, you could be making some good money. If you invest passively in an oil and gas deal, call it $50,000 just to try it, right? Your friend Adam said to do it, and you liked the numbers and you understood enough to say, yeah, I'm going to try it. You're making $300,000 as a mid-20-year-old, you probably got the cash. If that one thing led you to say, at the end of the year, you get this K1 that's negative, and you're like, I can't put this into TurboTax. I don't know how to. And I'm like, well, here, talk to my CPA or talk to this CPA. And you get a better CPA who guides you through saving $100,000 a year of tax on your super high income for the next 50 years. It is like probably quadrupled your net worth just based off compounding and not paying tax because of one decision up front.
Yeah. Because of an investment decision that you had no idea would lead into some other new relationship.
Yeah.
Yeah. This is a completely underrated and very overlooked aspect of this space that especially people like myself that tend to be more naturally introverted don't think about the network effects of investing in things like this. And when you take that step and you get connected with people, you're now, open up to their network and the potential benefits, Adam, to your point, for decades that could come from one new relationship, just from an investment that you made and someone made a recommendation to some other person.
We have a friend that we met, a business partner of ours, who I met through a mastermind group that when I first met him, I didn't really think, I didn't think we'd ever really share cell phone numbers, right? Other than, here's my business card, here's your business card. I think he has $1 million deployed to our deals right now between a few different deals, and I needed a hard money loan on something and something else. And it's been beneficial for him and it's been beneficial for me to kind of have that number in your pocket. This is a relationship game. Yep. And I think it becomes, I'm always amazed at who you meet and who you end up working with, right? The first time I met Dustin, I thought he was a cool dude, and I've learned the complete opposite.
It is a relationship game. You got to get into it and learn people. You can't trust your first impression, I think, Adam, is the takeaway
that's the
on
key
that, right?
there.
Yeah. But no, you're spot on. It's a relationship game, and simply, you go to events, join masterminds, all of the traditional things, but don't overlook the power that like actually investing in something, what that can do for the relationships and for the education that you could potentially get that you otherwise wouldn't have, and the doors that unlocks.
I mean, not to go into the individual investor, and this is probably where we'll kill it, I'm guessing, but you have an investor, an old coworker of yours who invested in something, and they probably had a handful of investment conversations over the last 5 years. And how many conversations have they had with you about investment in the last 2 months now, right? Exponential.
Yeah, several, for sure. In addition to emails and other questions and things like that.
and getting connected to our self-directed IRA custodian and being able to have access to other things of that nature, right? I mean, it just kind of grows.
Yeah, I mean that's a great real world example. I think you and I have both had this sort of situation, right, where we've had folks that may have known but didn't really know about the whole self-directed IRA standpoint, and because they were interested in investing in one of our deals with IRA money, we were able to kind of like help guide through that process, and were able to turn them over to our friends at Directed IRA that helped them through all of that. And so that has been that's now unlocked a whole new world for those investors that like they previously didn't really know that much about, and now they've not become experts, but they've invested. They know how to do it. That's now not this like dark unknown space anymore. So yeah, that's been a very recent real world example of the power of just wanting to make an investment in the different doors and the different opportunities that can open for you.
Yep.
You got any other thoughts here?
No, sir.
No? Well, you seemed like you had to think about that for a second.
I was going to say something along the lines of nothing positive about you or something like that. Okay. Back to my comment of when I first met you versus now, but I couldn't.
No, that's fine.
I wasn't quick enough witted to get you a real good answer.
No, that's okay. I was surprised when you said, when you first met me, you thought I was a cool dude. And I was like, oh, I've never heard that before. And so I'm like, okay, well, that's you quickly learned otherwise. I understand.
Yeah.
But no, everybody, we appreciate you listening. As always, if you like this episode, go give us a thumbs up or like us on YouTube and subscribe to the channel and give us a positive review on Apple and whatever it is that you do on Spotify, and let the computers know that you're enjoying it. If you got questions about anything like this, or interested in talking to us more about investments, certainly feel free to reach out. We have our social and contact info always in the release notes, but follow us, fellas. You can go to wealthindependencepod.com. We've got a contact form there, and we'll allow you to get in touch with us. And we'd obviously love to hear from you and answer questions. But with that, assuming Adam hasn't thought of another snide comment to make here. Okay. Adam.
No, sir.
So unfortunately then, Adam, I'll give you another week here to think of something funny for next week's episode. But again, everybody, we appreciate you listening as always, and we'll catch you on the next one. Just remember, where freedom leads, where wealth follows. Thanks, y'all.
Thanks for joining us on Wealth Independence. This show is for informational purposes only and is not financial, investment, legal, or tax advice, and does not constitute an offer to buy or sell securities. All investments carry risk, and investors should always conduct thorough due diligence and consult with qualified professionals before investing. Until next time, remember, freedom leads and real wealth follows.